let us know when it's gone live, Maya? All right, here we go. Welcome everyone. The time now is 11:30 a.m. Sydney AEST time. My name is Joel Ramirez. I'm one of the team here at Kpmg's Wiise software business. Thank you all for attending today's free webinar event. I'm sure a lot of you have been impacted by recent events to varying degrees. We all have, I suppose, and can't wait to hear how you can pivot your business moving forward. Now, our event today was a culmination of ideas around how we could best give back to you, to the business community at large in these uncertain times. And we thought, wouldn't it be great if we could leverage our internal relationships within Kpmg and get the experts to share their knowledge around government stimulus packages and how they may apply to you today, as well as things to think about to help you plan ahead for post-COVID-19 tomorrow. So today, just going to bring them up on the screen. We have two very special guests, highly experienced partners sharing with you today, and they are Brent Murphy, partner and head of tax at Kpmg's Enterprise, as well as Dale Curry. Hello, Brent. As well as Dale Curry, partner, Enterprise Advisory Practice at Kpmg. Hello, Dale. If you have any questions, please type them in the Q&A chat window if you guys can see it. And it should be around the right of your screen. What we'll then do is we'll go through them at the Q&A session after both speakers finish their presentations. So, okay, without further ado, let me introduce you to our first speaker, Brent Murphy, who will get us through the government stimulus packages. On to you, Brent.
Fantastic, thanks, Joel, and good morning all. I've been spending a lot of time over the last 3 or 4 weeks on the phone and in webinars, meetings with clients talking about the stimulus package. It's fair to say that most of them are wishing to focus on the JobKeeper and before that the cash flow bonus that the government released. There are other stimulus packages out there, but I'll focus today predominantly on those. We've got a bit of a timeline there for some of the major support released for business to date, and just the time as to which they're available. Most are either imminent or already available, but there's the drawdown on superannuation, so you can get in and register for that now. There's a couple of asset-based incentives, so the instant asset write-off or accelerated depreciation. Fair to say they're probably not having the cut through that government might have hoped for, because most businesses in the current environment aren't looking to invest in their plant and equipment. But there are, for those who are, then there's some brilliant incentives there. There's about $1 billion worth of support that's been announced for particular regions and industries, particularly around tourism and others that are most affected by coronavirus. Hospitality as well is another one. JobKeeper, which I'll come back to in more detail. The early release from Super has started now. You can go online and register for that. The cash flow for employers, that will start to come through. That has started to come through already, even though technically it wasn't supposed to happen until the 28th of April. So you might be seeing that in your when you lodge your BAS already. And then JobKeeper, that'll start in the first week of May. So I'll talk to that in a little bit more detail, particularly the JobKeeper, because I think that's typically of most interest to employers, and it's by far the biggest cash stimulus that most will receive. There's a couple of key criteria which many of you may be already across. What we're finding with most businesses is that they are fairly well informed as to the broad parameters of the various incentives that have been provided, but there is a fair bit of devil in the detail. Particularly with JobKeeper, it was only announced a couple of weeks ago, and since then there's almost daily updates on the ATO website in relation to various issues. There was even one overnight, which is fairly unprecedented, which says that there's a particular known issue with the application process. You can either call us today and we'll work through you, but there's really long wait times, or you can wait till tomorrow and we'll have it fixed with the application. So the ATO is taking a pretty practical approach to things, which is almost unprecedented in my experience. It's good to see, but they're really trying to work with business to make sure that these incentives are able to be accessed. So that's really a great development initiative by the ATO. So JobKeeper, it's available for up to 6 months. You needed to have employees on your books in order to receive the JobKeeper. They need to have been employed by you on the 1st of March and need to be currently employed. You can rehire in order to come back within the regime, and it does apply to employees who've been stood down. Typically where employees have been stood down, then they are still legally employed. They are still accruing entitlements to annual leave and long service leave. They're just not receiving their wage or salary. So JobKeeper will apply to those employees. For smaller businesses where there aren't any employees but there are principals, JobKeeper can apply to effectively one principal per business. So whether that's a director, a shareholder, a trust beneficiary. So and it would seem, even though this seems contrary to the original announcement, that even where that business has other employees, that both the principal and the other employees can access it, even if the principal isn't an employee. So that's been an important development for smaller businesses. The payment is $1,500 per fortnight. That won't come through until the first week of May. So probably one of the biggest issues and concerns right now for employers who are looking to access JobKeeper is that they need to fund that $1,500 per fortnight per eligible employee in advance of receiving that reimbursement from the government. So it'll always be a month in arrears. So that is causing some level of stress amongst employers, and I suppose the major reason why some might question whether they can afford to participate is around just that 1 month funding. Response to that's been a little bit impractical in that the ATO has said, well, banks have been provided with support as part of the overall stimulus package, and will be stepping up in order to help you fund that monthly in arrears payment. But typically banks just aren't set up to turn on that funding that quickly. So if you've only got a month and the application process is live now for an early May payment, if you haven't already made the payments by the end of April, you're not going to be eligible. So practically looking to get banks involved in helping to fund that where you don't already have those arrangements in place, given the speed at which banks are really forced to operate since the Banking Royal Commission is fairly impractical. So the employees need to get $1,500 a fortnight. They are taxed on that. If someone's paid less than $1,500 a fortnight currently, you still need to top them up to the $1,500 per fortnight, or else they won't be eligible. So an employee who's currently getting $1,000 a fortnight, to be eligible for JobKeeper, they'll need to get $1,500, so you'll need to be increasing their pay. But ultimately, it's funded by the government, so apart from that timing issue, then the employer's not out of pocket, except to the extent that they choose to pay superannuation. The main criteria for, and I'm presuming that most in this meeting have got turnover of less than $1 billion, and that's a 30% reduction in business. Don't actually under the base test have to show that that's related to COVID. There is an alternate test because a lot of the issues are around, well, how do you tell whether or not your business is reduced by more than 30%? The guidance on that, or the legislation, basically says you compare it to the same period last year. And so you could choose to compare either the month of March or the month of April based on forward projections, or the April to June quarter, for example, with the previous corresponding period last year. And if there's been a 30% reduction, then you're in. There's going to be businesses that have been growing, but have still ultimately, from their peak, had a more than 30% fall off because of the current circumstances. There's an alternate test where we don't have the rules yet. We think they might be released tomorrow. There's an alternate test where you will have to be able to demonstrate to the tax office, and hopefully we'll get some safe harbours where if you satisfy that, you'll be taken to have demonstrated this to the tax office, but you will actually have to demonstrate to the tax office that you've suffered a fall off where your business has been growing, or where there's been a transaction, which means the business is of a different scale than it was. There could be a lot of reasons why potentially the 30%, you have seen a 30% fall off, but it's not appropriate to compare it to the same period last year. So there is provision for that, but it's just not clear at the moment what those rules will be. And then there's a registration process that's live now, and there's going to be some monthly reporting. So effectively, from Sunday night, you were able to register. It was meant to go live Monday, but it went live Sunday night. You're able to register for JobKeeper. You go through the ATO website. There's lots of guidance on the ATO website as what you need to do around that. As I mentioned earlier, there's some problems with the registration process which are getting resolved as they go, particularly where you don't have employees but you're a principal. But generally, I would urge you, this week, effectively, you need to be getting on and registering for the JobKeeper incentive in order to be able to get the payments, which will start to come through in that from the 4th of May. So that's probably what I wanted to cover broadly for JobKeeper. Is worth noting that, yes, you do have to pay your employees in advance. There's some discretion for the first 2 fortnights. So technically the first fortnight for JobKeeper purposes ended on the 12th of April, and the next one will end on the 26th of April. For some reason you haven't made the payments by that date. The ATO is basically saying if you make them by the end of April, you can attribute them back to those periods, and the ATO will exercise a discretion that's in the legislation to treat those payments having been made on time. The other important thing you need to do before you can register is effectively get your employees' consent and confirmation from them that they qualify. For employees to qualify, they need to be an Australian citizen, or effectively various classes of visa, which typically means someone who's from New Zealand and under the various visas that apply to New Zealanders. And they need to confirm that they're not seeking JobKeeper from any other employer, and that they qualify under those criteria. So you don't need to send that to the ATO, but you do need to have sent something to employees and had confirmation back effectively by the end of April. So it's an incredibly tight window in order to do all that. Probably the other thing just to touch on briefly too is the cash flow boost. So that should come through automatically through your BAS. It's a refund of generally of PAYG up to $50,000, and that's PAYG withholding made on salary and wages up to $50,000 over the period from March BAS through to your June BAS. If you pay a monthly BAS, then you'll get a 300% refund of the PAYG included in your monthly March BAS. If you pay quarterly, then you'll get a 100% refund of that, up to $50,000. and then periodically, as you lodge BASs for the remainder of the financial year, you'll get a refund or a credit until that 50,000 is exhausted. I said refund. You get a refund if the credit of that amount pushes your account into refund, and that won't come through until at least 14 days after the credit's been released. Then in the second half of the scheme, there's another $50,000 maximum available to employers who received it in the current financial year, and that'll just be 1 quarter each month of what you received up to 30 June or in respect of the period up to 30 June. So for example, if you got the $50,000 through to 30 June, you'll potentially get 12,500 in July, August, September and October. It's automatic, you don't need to apply. It wasn't meant to start until the 28th, but we've started to see employers getting refunds already or getting credits already. Sorry, credits rather than refunds. There are mistakes, so there's some who've received it who haven't been entitled to receive it because it only applies where your turnover is under 50 million. And looks at worldwide turnover where you're part of a worldwide group. So we've seen some employers where they are part of a broader group that aren't entitled receiving it. So no doubt that'll get clawed back at some stage, but it shows there's probably a few bugs in the ATO system. So those were a couple of the key things I wanted to touch on today, Joelle, but happy to take sort of questions later on in relation to that.
Yes. No, thank you, Brent. That was very informative. I'm sure we'll hear from you later on again in the Q&A session. I know that someone did ask a question, so we'll save that for the end. So in the meantime, what I'll do is let's bring Dave. Hold on, just give me a second. Oh, there you go. There's a screen. We'll bring you Dale Curry, who will take us through how to prepare your business now for the post-COVID world. On to you, Dale.
Yeah, thanks. Thanks very much, Joelle. Morning, everybody. Joelle, I will just ask you to drive the slides if you don't mind as we progress. They're not content heavy. There's just a couple of slides. I think what I wanted to share with everybody today is some of the things that we are seeing and we are doing in the market, and really fundamentally a lot of our clients are asking us if this is the new normal, and if it is the new normal, if businesses can be disrupted so quickly, what are the broader implications for those businesses and for business planning more generally. And so I might just take you through a couple of thought processes and approaches that we've adopted and really the way we are looking to answer these questions. So firstly, if I take you to the next slide, Joelle, we think about what are those lessons that can be learnt by looking backwards. And it's important that businesses look backwards to really get a sense of how were they positioned strategically and operationally as they moved into this crisis and what can be learnt from that. So really the first thing that is immediately obvious is being mobile and having good data in a time like this is just a really tremendous advantage to businesses. And why we say that is because being mobile really allows businesses to move off a particular site very quickly to maintain as much as possible ordinary operations and to maintain communication amongst teams, between staff, and then obviously with other stakeholders like shareholders, customers, suppliers, funders, and the like. And really, what's the point of good data? So lots of businesses that we have engaged with and that engage with us have pivoted their business models. We've seen manufacturers of clothing very quickly switch those and start making PPE. We've seen distilleries that have been making gin pivot those businesses and start making hand sanitizers. And really underneath all of that and underlying all of that is data, and that is the ability for businesses to look at the numbers, to look at their value chains, and work out what are the opportunities in them, and also what are the stresses that need to be addressed very quickly. So data has been really pivotal in allowing businesses to formulate responses quickly. The next thing, which has come up time and time again, and for those on the line that lived through the GFC, these topics were raised through the GFC, but I think put on the back burner because lots of businesses thought, well, look, I'm not in financial services, I don't do a great deal of derivatives trading, so I should be okay. But we've seen businesses that have got detailed forecasts better prepared in managing in crisis situations, right? And a lot of the time, these forecasts are that they predict some degree of seasonality, they predict some degree of growth and of increased expenditure. But what they don't do is they don't often stress test the businesses. And what we mean by that is they don't often take more than one variable into account and apply a negative trend to that variable and see what happens to underlying profit and in particular cash flow. So looking back, could businesses have been better prepared by stress testing their forecasts? Absolutely. Could businesses have been better prepared by having robust forecasts that form part of their management reporting packs and documents? Absolutely, without a doubt. And probably from our perspective, COVID-19 happened so quickly, and it caught not only a lot of professional managers off guard, but it also caught a lot of boards off guard. And so we don't think it's unimaginable now that boards will start imposing greater requirements around budgets and forecasts so that they can satisfy their own fiduciary duties, and members on the board take on personal responsibility. They might sort of put some onerous requirements on management to stress test their forecasts and their budgets, so that they can take comfort that they're not only executing their fiduciary duties properly, but they're also in a position which defends any personal liability which they take on. So those are really, I guess, 2 or 3 key points that have emerged very quickly and very clearly by looking back. I might just take everybody to the next slide when we think about how do we move forward from here. What are the things that we need to think about, and really how do we account for this? So during this COVID-19, we've seen organizations do a couple of things particularly well. So the first was actually understanding the crisis and managing it, right? So putting in place crisis management plans, engagement strategies for staff and for other stakeholders, and then work through cost optimization opportunities and be quite strategic about that, understanding those stresses in the business, and then really thinking about both their business models and operating models. So strategies into the future will change, right? I think there's almost no doubt about that. And I think fundamentally, business models and operating models have had to change to deal with the pandemic and to deal with the crisis and the new operating environment. And so those changes are likely to be long dated and long lasting. Strategic review cycles will become shorter. So I think the days of a 5 to 10 year strategy will be gone. They will be a 12-month strategy with an annual review, or an 18-month or 3-year strategy maximum with an annual review. And I think businesses who have pivoted away from their traditional lines of business during this crisis will now consider making these new focus areas the main focus areas, right? So that will fundamentally shift what they were doing to perhaps and potentially what they are doing now. from a business model perspective, there's no doubt that pricing is something that will change and will need to be rethought depending on the kind of business and depending on how that business distributes its products to its customers. But brand propositions and engagement channels will almost certainly change now. We are all engaging in a very different way to what we were doing sort of 4 or 5 weeks ago. Our channels of communication are different. Our channels to get products out to market are different, and we are relying more heavily on digital channels. So businesses that were behind the digital curve will now ramp up. And I think when things revert to normal, there will be a digital and non-digital engagement strategy and opportunity to optimize both those sorts of channels. So operating models, well, I've mentioned mobility and being online and in the cloud. I think those are going to be here to stay. I think risk and governance changes that I mentioned previously will probably get enhanced. Business continuity plans will go beyond thoughts about how can I access my ERP in the event of a disaster. They will actually go through an entire crisis management plan, and that management plan will need to have some resources that are aligned to support it. And so this whole notion of business continuity planning, I think, will be broadened and will become front of mind for CEOs and for boards. And finally, I think there will be some serious consideration given to organizational structure. So actually how people are structured inside of an organization and their business physical footprint. So potentially working from home options will become perhaps more normal or more normalized. Business owners might see it as an opportunity to reduce one of the biggest cost items in the profit and loss. And I think businesses will fundamentally rethink what it would ideally like to have versus what it needs to have, right? And so I think this notion of what is minimally viable under normal circumstances and under distress circumstances will come to the fore. And so just sort of wrapping that up, what is the advice that we are giving off the back of some of the actions that we are taking, or that we are seeing has been taken? So anything which is done at the moment, any strategic initiative or tactical action taken during the crisis should ideally remain relevant beyond the time frame of the crisis. So if you are investing in a mobile solution, you would want that mobile solution to have sufficient longevity that you can continue to earn a return on that investment over time. If your business model or your operating model is pivoting, then you would want to ensure that when things return to normal, that part of the business doesn't fall off a cliff, that you actually have the option to extend it and continue to leverage it. And if not, there should be an ordinary wind down while other more profitable parts of the business grow. And fundamentally, we think that businesses have by and large done the right thing for the time being. They've put the health and safety of their employees and families first. They've gone through an exercise to think about what discretionary spend can they stop, and then they've been quite tactical to say what levers can we pull and should we pull and push to ensure we continue to turn the wheels. But now I think as we start emerging from this, businesses will start saying, well, we had a strategy leading into this period. We've implemented a whole lot of changes. How does that impact our strategy, and how does that impact our value proposition in the market? And we think that a lot of effort and a lot of work will be formed around there. So I'm just conscious of time, Rahul, and some of the questions. So I might pause there and see if there are any questions either relating to what we've just covered or relating to Brent's topics.
Yes, well, first of all, thank you, Dale, for sharing that bit of information. That's jam-packed. I had so many light bulb um, type of moments myself throughout your presentation. I'm just trying to breathe it all in. The time now is actually 12 noon. I think we have about 8 questions in the Q&A section. I know that this is a 30-minute session, but for those of you who want to stay, want to hear the questions and want to hear the guys answer them, please stay with us. I think what we'll do is save another 10 minutes for the Q&A session and see how we go from there, if that's okay with you both as well.
Yeah, sure.
So I think the first question was from Michael, and he asked, can we claim JobKeeper for an employee who left in April? Brent?
No, so once employees have left, they'd no longer be eligible for JobKeeper.
Okay. All right. I have a question from Rob Clifton Steele. He said that it's interesting that we have already received a boost cash flow. So is there likely to have to be a second tranche to hit before the 30th of June?
No, Rob. So you will receive the next tranche. So assuming you've already maxed out your 50,000 in the first tranche, you should receive the next tranche in 4 installments: July, August, September, and October. I think it's meant to be the 28th of each month. Having said all that, you weren't meant to get this cash flow boost before the 28th of this month, so who knows? But I wouldn't be planning on receiving it before the end of each month.
Okay. Another one said, if there are working directors, can you claim JobKeeper for both? Good question.
No, this is actually, that's a good question. It's coming up a bit. You can only nominate one, so potentially you've got a bit of an argument over who to nominate. Having said that, if you're also employees as well as directors, then you can get it in your capacity as employee. So the director nomination is really intended for where you're not also an employee and receiving Kpmg amounts effectively being deducted from a salary and wage that's being paid. So that's, some businesses don't remunerate themselves, or they remunerate themselves via dividends or trust distribution. So it's looking at that position. But if you do have 2 directors who aren't otherwise employees, then you have to nominate one. There's nothing to say that you can't have a different one for each fortnight, so you can flip-flop each fortnight or nominate one for a certain period and then change that to try and even it out. But this is a real practical problem with the rules.
Okay. Thank you, Brent. I've got one from Elisa, and she said, we've got an employee who's a permanent casual for the past 10 years. He's charged out. We pay him based on the number of hours he works on the client. Now, those hours have obviously significantly been reduced. The client does not bear any JobKeeper costs. So does he? And it says we would keep invoicing the client based on just the number of contact hours our employee works. If that makes sense.
Yeah, they're probably 2 separate issues. So the JobKeeper incentive won't look at how you invoice that time onto clients. So as long as a casual employee, they need to have been employed for 12 months and be effectively have a substantial rollover that 12 months. But assuming that's the case, even if they're working no hours, then they could potentially still qualify for JobKeeper as long as you're paying them the $1,500 per fortnight. So they can be stood down and not being entitled to receive any salary apart from the 1,500, and you don't have to charge that onto clients. That's just a separate commercial issue. But if they're not doing any hours, what we've seen some clients do is to try and at least, or they're proposing to at least match the hours that effectively are being funded by JobKeeper with the hours that people are working, but that's not always possible. But that's something to consider.
On that topic around JobKeeper, Brent, what happens if we say want to rehire someone that was made redundant? Or have you answered that question already?
I don't think so, Joel. Good question. So you can rehire and become eligible. That employee can become eligible for JobKeeper if there's been a period between the 30th of March and when they're rehired that they're not employed. Then JobKeeper won't be payable in respect of that period of non-employment because it only covers a period of employment. But having said that, it'll go for 6 months, so it's still well worthwhile, if appropriate, considering re-engaging employees so that they can get JobKeeper. Bear in mind that as an employer, you'll still have potentially other employee obligations, so they'll continue to accrue leave, etc. And you will have to fund that JobKeeper payment in advance still. So there are some commercial considerations. But
does that include super on top of the JobKeeper allowance?
Yeah. So where an employee is receiving less than currently less than the 1,500 per fortnight, you don't have to top up their superannuation to the 1,500. So, for example, if an employee is typically getting $1,000 a fortnight, under JobKeeper they have to be paid 1,500. There's no obligation to pay the super on the excess, so that you'd pay super on the 1,000, not the 1,500, unless the employer chooses to do it on the 1,500. But otherwise, subject to that, normal superannuation guarantee rules apply. So to the extent that employees receiving salary or wages in the ordinary course of their employment, then you have to pay super on that.
Okay. Thank you, Brent. I've got a question from Johnny surrounding startups. His question was, are there any other schemes in place for businesses like these startups who are in a high growth phase, therefore don't comply to the 30% reduction, but they've had a hit in lost sales? For example, their growth have slowed from 100% per annum down to 50%. What do you say to that?
Yeah, Johnny, this is a known issue, and it's one that the government has said that they will deal with and have given the tax officer discretion to deal with. So that's going to fall into that alternative test that I touched on earlier, and we work with a number of startups, and we're seeing this question come up often. So the idea is that if you've had a 30% reduction in revenue, we think from what would be a normal sustainable high point, and you can show that that relates to COVID, then you should be able to access JobKeeper. We are looking for guidance on that, which we're hoping to receive tomorrow. We're expecting that, so the new rules are imminent. So my recommendation would be that if you've had that sort of a reduction to your growth, to go ahead and register. And then the criteria that you might need to, additional information you might need to supply to the tax office in order to get the cash flowing, hopefully will be made public over the next couple of days.
Thank you, Brent. It's maybe a quick question for Dale, and then we'll choose one more question, and then we close for timing issues considerations. Sorry, Dale, with everything going on right now, do you think this is the right time to be thinking about strategy? Or shouldn't we just be thinking about survival Which one do we?
Yeah, I think it's a really good question, Joel. I think absolutely short-term focus is and has been and should be on sort of health and well-being, and then businesses have to pivot to ensure that they survive and that they get through this period and that they access some of the support packages and relief packages, whether it be JobKeeper or some of the bank funding which the government has guaranteed to the tune of 50%. But my view is businesses need to continue to think about their strategy, and as soon as operating rhythms settle through this COVID period, my recommendation is businesses start thinking about what their longer term, what their 12-month, 18-month strategy is, as we all emerge, as the society emerges from the crisis, and we slowly start returning to I guess a normalized business environment.
Okay. And do you think you mentioned the word government there? Do you think they'll make business continuity planning, for example, compulsory? With things like statutory returns or audits, for example.
Look, it's a hard question to answer. I think there's every temptation to incorporate business continuity planning as part of an audit, and I should say that I'm not an auditor, but I do know that audits tend to be signed off on a going concern basis, and I think to get some sort of comfort around how an organisation can continue to operate as a going concern, if a shock were to hit the economy, I think is a consideration that certainly the auditors would want to at least be asking management if they've considered. So whether or not it becomes mandatory, whether or not there's specific sign-off on that, I'm not sure, but I think the auditors will start placing greater emphasis on business continuity plans and really how they support this notion of going concern in the event of a shock like we are experiencing.
Thank you. And someone asked, and Sean asked, if what kind of advice would you give to business owners, Dale, that have a higher sense of fear for the digital curb?
Look, my view is, and the advice that we give is, the world is generally moving more digital, and we take comfort in the things that we are familiar with, but ultimately you don't have to go to the digital edge overnight. You can embark on a journey, and typically we try and take clients that fear or that have some reluctance to go digital. We try and take them on this journey and really articulate for them what the benefits are, but also what the costs and the risks of not embarking on this journey are. Because I think sometimes that part of the thought process isn't considered, and we think it's pretty fundamental. So the advice given is it's a journey, and it's to a better destination than where you start from, and that ultimately what it seeks to do is to build robustness into your business and therefore into your livelihood.
That's a good advice. Thank you, Dale. And before we, I know there are one or two more questions, but we've really run out of time. I'm so sorry, everyone. But before we switch off, Dale and Brent, how can people reach out to you? You guys are the experts at this. What's your advice if people want to know more, seek help? Where to from here?
You want to go, Brent?
Look, we're sort of more than happy to help you through any queries you've got in relation to either current incentives or broader issues you've got with your business, whether you're looking to restructure or, you know, for some we're seeing opportunities come into the market as well, so it's not all doom and gloom. And some in the right industries are doing well and are actually looking to get on the front foot and maximise the fact that values might be distressed or low, or yeah, there's certainly opportunities in the market, but more broadly, that's not the case for most. And so we're here, willing and able to help as best we can.
And I think I would just add to that and point everybody to the dedicated Kpmg COVID portal, where we've published all our sort of articles and practical advice on government support and on getting your workforce mobile and digital, and how to stress test your business. And Joel, Brent and I are both featured on that portal, and we're on LinkedIn if anybody does want to look us up.
Thank you, Dale. So thank you again. All right, everyone, that concludes our session for today. If you found this useful, please tell your friends, tell your customers, tell your partners. We have another session tomorrow with Dale and Brent. You're free to come and join us once again if you wanted to. But if you found this valuable as much as I have, please share it with others, so that others may get further advice from the partners here at Kpmg. I'd like to quickly thank you, Brent and Dale, for sparing us your time and sharing your knowledge with everybody. I'm sure we've all learned something from it. And obviously, of course, thank you all for taking a chunk out of your busy day to be here with us. Again, if you have any further questions for Brent or Dale at Kpmg, please let us know and we'll pass it on to them. Until then, we hope you and your family stay safe and healthy, and we'll look forward to connecting with you soon. We're in this together, everyone. This is Joel from Wiise Software signing out.
Thanks, Joel.
Thanks, everybody.